Hey guys, so I'm going to take a look at a coin called Gala right now. The ticker for this is just GALA. I don't know anything about this coin, but somebody requested that I take a look at it. So yeah, that's what I'm going to do. The last video I did was analysis on Hedera, and this actually looks somewhat similar to how Hedera looks. So basically, we have this long multi-year downsloping level of resistance. Or actually, no, not multi-year. This one, oh yeah, it started back in 2021. So just under 2 years. So yeah, this long level of resistance that we recently broke out of. And since we broke out of it, we did a retrace. Now, the retrace that we did, I'm going to run a Fibonacci just to see where we got our bounce back from this region. This bottom to the top here. Okay. So if anyone tells you that Fibonacci retracements don't work, they're wrong. They clearly work, and I'll show you why. Look, basically right here, okay, so I ran the fib from the bottom of the breakout to the top, and look at where we got support at. So it was fighting with this level for a while, this 618, which is quite common, right? But eventually when we broke down, the next level that we came down to was this 786 range. Now we wicked down to the 88, but I'm paying attention to where the body of the candle closes, and as you can see, Sunday evening on this day, the buyers came in and protected this range, and the candle body closed above this 786 retracement level. And since then, we're trying to make our way up here, but as you can see, this is sort of somewhat like a little bit of a bear flag, and we broke below it. Now, later on in the video, I'm gonna dial this into the shorter term time frames, and I'll basically show you some potential trade setups, if any, are in this range here. Okay, before I get into more, I should mention that if you're not subscribed, you should subscribe now, because if you find this analysis helpful, it's going to be hard for you to find this channel again in the future, because it's brand new and there's very low subscribers. So yeah, if you want more analysis videos, I'm going to be doing about 2 or 3 of these videos every single day. Just hit subscribe, and when you do that, click the bell and then click on all, and that way you'll be notified for the upcoming videos. Okay, so if you're going to trade Gala, I would suggest the most important line to draw on your chart. Actually, we kind of breached it now. It's not as significant anymore, but it was this one. Now I would say you want to draw these 2 horizontal lines, and I want you to draw them, or I would suggest drawing them on the weekly time frame, because you'll see the body of the candles really respect these levels on the weekly. If you look at it on the 4-hour or the daily, you're going to see the price slicing through, but it's the weekly time frame that holds significance on this chart. Okay, so the first level, as you can see, it was the level of support right here. And then when we came down, it was a level of support right here for several weeks. The price, like, it was fighting with this range for several weeks until we eventually broke down. And then as we came up, it served as a resistance. So it was support, then it flipped to resistance. And then obviously as the price comes back up to it, if we get there, then it'll be a level of resistance as well. Okay, and that price level, I mean, you can just eye it out. Basically take the trend line and just draw it right over these 2 candle bodies here. But it is, for me, it's around 0.07062, so about 7 cents. Okay, the second level I would recommend drawing is right here, and for me that is 0.04978. And as you can see, multiple times as the price broke this level, we got the wick right to this level, and then as the price broke through here, it held as support for a few months. So this is a very strong established level of support. And obviously, when we approach it from underneath, it's a level of resistance. So if the price is able to come back here, this is going to be a main level of resistance. And if this breaks, it's going to be here. I imagine if this breaks, you're going to probably come up here, maybe have a bit of a sell-off, come back here, test it as support. It might range in here for a little while before the ultimate breakout. Now, this could be a potential double bottom. And one thing that looks promising here is you see how we have this level here, this level of resistance here. This impulsive move came above it, and then when we're selling off, so far we have not breached this low, right? So on this weekly time frame, we have a higher high here in relation to this point here, and then a higher low. So this could be the start of a larger uptrend, right? But first, for me, the most important level on this chart to breach, obviously this is going to be an important level, but this one right here. Once this level's breached here, it's pretty open. Now, when you're trading and you don't have a clear level of resistance, what you can do is you can take the Fibonacci, and instead of drawing it from the bottom to the top, you can just run the projection from the top down to the bottom. And then what you want to do is you want to look for levels of confluence. Okay, so if this level breaks, okay, so this level here, this is the 382 in addition to this trend line. So a lot of confluence up here. This is going to be a heavy level of resistance, and knowing that if the price comes up here and you're just a trader, you don't care about this particular project, you can look to enter maybe a short position here with a stop loss just above, and you can target this bottom range. So I'm just going to see what that would look like. So if I entered a short, say the price came up here and it started showing some bearish signs, maybe a doji candle or something like that, bearish divergence. All right, so I marked up a potential short position. I placed my stop loss just above here, this level of potential resistance, and my take profit would theoretically be down here at this previous resistance flip support. So for this trade, I would risk about 8%, which is a little high, and I would potentially get just under 30% if the trade works out, for a risk-reward ratio of 1 to 3.6, meaning for every $1 that I'm risking, I could potentially get $3.60 back. Okay, now, the reason why I have to risk 8% for that particular trade is because I'm on a weekly time frame, and I realize, a lot of people don't want to risk that much. So yeah, that's why I'll show you right now. I'll show you potential trades you can take on the shorter time frames where you don't have to risk as much and you can have a tighter stop loss. Okay, so let's move this down to the 1 hour. And actually, first let's look at the daily and let's recap where we are. Okay, so a little bit of a bear flag here going on, and we broke down. And now we're just kind of in this range between the previous day low and the previous day high. So let's go down to the 1 hour time frame. Okay. So on this, a potential trade setup could be if the price makes it back up to here, which is the previous support that we just broke on the daily time frame. I imagine a lot of traders are going to place short positions right here, and then you can place a stop loss just above, and then you can target back down here to the previous day low. That's a potential setup. If you didn't want to do that, what you can do, just trading within this previous day low and previous day high, which you can do, where I would potentially enter a short position. If I was trading Gala, I'm not. Would be right here, the previous day high, right here. And if I drag it across, you'll see that it is also the previous level of support right here, right? So if the price comes back up here, what you could do, or what somebody could do, not financial advice, they could enter a short position right here and then put the stop loss slightly above this range, and then target the previous day low. So just this right here, so we don't have to risk a lot on shorter time frames, and we can get insane risk rewards. So with this, we would only risk 0.37%, and if this trade plays out, we would get just under 5% for that. So this is a risk reward ratio of 1 to 13. So for every $1 we risk, we could potentially get $13 in return. So this is a really good potential trade setup. It might not work out, but if it doesn't work out, you lost less than 0.5%. It's not a big deal. And, you're not always going to be right. Just accept that. But you want to be taking trades where even if you're wrong half the time, you're still profitable, right? So this is a 1 to 13 risk reward ratio. If all you took were these trades and you were wrong half the time, you'd be driving a Lambo, right? So yeah, anyway, that is Gala. So to recap, I'll go back out to the weekly time frame here. Yeah, we broke out of this long resistance level, which is a very good sign. We made a higher high in relation to this. We came down exactly to the 786 level where we wicked off here. No, the wick was about the 88 fib, but the body closed above the 786, which is a bullish sign. On the daily time frame, we just broke this level. It's not really a strong sign. However, it gives us a trade opportunity on the 1 hour, if the price makes it back up to this level, the previous day high and the previous level of support, which will likely flip to resistance. If this breaks, it'll come up here, which gives you another potential short opportunity. Or if this breaks, for example, breaks through a retest, then you can just look for a long, and then you would just place your stop loss just below here, and then you would target this range right here. So let's see what that would look like if we did a long instead. We bought the retest of this range, we placed a stop just below these wicks, and then we targeted this upper range here. Then that would give us a risk reward ratio of 1 to 7.62. We would risk 0.54% to potentially get over 4%, which could be amplified with leverage. All right, so those are just two potential setups for you. And yeah, that's my overall view of Gala. Looks good. Nothing crazy yet. We still have to break the most important levels, which I mentioned, just to recap again, would be right here. These two. This horizontal level of resistance and this horizontal level of resistance. If that breaks, just the fib levels will be your resistances. So you have the 50, the 618, and the 786. This one has a lot of confluence up here at 36 cents because it's the former resistance right here. That would be a major, major level and ideal for a short position, maybe just down here, something like that. Obviously, if it makes it up here, then the trend's going to be a bullish trend. You don't really want to play too many counter trend positions, but if you're going to do that, just have a modest price target, and it should be good. All right, guys. And once again, if you're not subscribed and you want more updates, if you found this helpful, just hit subscribe now, click the bell, click on all, and yeah, have a good day. Bye.